Hey everyone, welcome back to Corporate Decoder, the place where we make sense of the money world, but this time we're diving into something a bit more grounded and less flashy, if you catch my drift. Alright folks, today we're unpacking the latest financial report from AEI Income and Growth Fund 25 LLC. Now this isn't your typical splashy tech company report, this is about real estate, income and growth. Think less Silicon Valley hype, more steady returns. Before we dive into the numbers, if you're all about breaking down these corporate filings into plain English, make sure you're subscribed, and if you want to join a community that's just as curious about corporate finance as you are, come hang out with us on Discord, link down below. Let's start by looking at what AEI Income and Growth Fund 25 LLC owns and owes. On the asset side, they have cash, which has almost doubled, jumping from about $1.7 million at the end of 2024 to over $3.2 million. Of the end of 2024 to over $3.2 million. By June 2025, that's a big jump in cash, which is always a good sign. Their real estate investment fix include $1 million. Overall, their total assets grew slightly to about $16.3 million. Overall, their total assets grew slightly to about $16.3 million. Of the end of 2025, that's a big jump in cash, which is always a good sign. Their real estate investments, after accounting for wear and tear or depreciation, sits around $13 million. Overall, their total assets grew slightly to about $16.3 million. Overall, their total assets grew slightly to about $16.3 million. Overall, their total assets grew slightly to about $16.3 million. Now let's look at what they owe and what belongs to their members. Their liabilities are pretty low. They owe a little over $750,000 to others, mostly things like distributions they need to pay out and rent they've received but haven't earned yet. This is a good thing. It means they aren't burdened by a lot of debt. The bulk of what you see here is members' equity, which is essentially the value owned by the people invested in the fund. This is around $15.5 million, showing that the company is primarily funded by its investors rather than debt. Now let's talk about how much money they made and spent. For the first 6 months of 2025, their rental income was about $19,000. That's up a bit from the same period in 2024, which brought in just over $1,000. This small increase in rent is good, likely due to rent adjustments on their properties. One of the big expenses they have is depreciation and amortization, which for the first 6 months of 2025 was around $344,000, down from about $389,000 in the prior year. This drop is mainly because they've sold some properties, so there's less to depreciate. Here's where things get really interesting. In the first 6 months of 2025, they reported a gain on the sale of real estate of over $1.2 million. This is huge compared to the $711 they made from a sale in the same period of 2024. This big gain in 2025 is from selling a property in Michigan, which significantly boosted their net income. Because of that big gain on sale, their net income for the first 6 months of 2025 was nearly $1.6 million. That's a massive jump from just over $2,000 in the first half of 2024. Without that property sale in 2025, their income would have been much closer to 2024's levels, driven primarily by rental income. Next, let's look at where the money is actually moving. The statement of cash flows tells us how they generated and used their cash. For the first 6 months of 2025, they brought in about $660,000 from their day-to-day operations, which is up from about $562,000 in 2024. This increase is thanks to that higher rental income and fewer management expenses paid to affiliated companies in 2025. In the investing activities section, you can see they received over $2 million from selling real estate in the first half of 2024. This is a huge increase from about $408,000 in 24. This cash inflow from selling properties is a major driver of their overall cash increase. On the financing side, they paid out over $1.1 million to members, which includes regular distributions and also money to buy back units from some investors, which they call repurchase of member units. This outflow is higher than in 2024, and it's something to keep an eye on. All this activity resulted in a significant increase in their cash balance, ending up with over $3.2 million at the end of June 2025, compared to about $1.7 million at the start of the year. Now, let's look at how the owner's stake in the company has changed. This table shows the movement in the members' equity over time. You can see the number of units outstanding has decreased from almost 37,000 at the beginning of the year to just over 35,700 by the end of June. This is due to the company buying back units from some investors. This repurchase isn't necessarily bad. It can increase the ownership percentage of the remaining investors. The total members' equity at the end of June 2025 was just over $15.5 million. While the total equity number hasn't changed drastically, the reduction in outstanding units means the value per unit for the remaining investors has likely increased. Now for the footnotes. These are super important because they give context to the numbers. This note basically says these are uncolored financial statements, meaning they haven't been officially checked by an auditor yet. But the company believes they're fair and accurate. They also mention that they're leaving out some details that you'd normally find in a full financial report to keep it concise, but they believe they've included enough to not be misleading. Here they explain that AEI Income Growth Fund 25 LLC is managed by AEI Fund Management XXI Inc. and that AEI Fund Management Inc. handles the day-to-day stuff. It gives you a bit of background on who's running the show. This is a key note. It confirms that on March 31, 25, the company sold a 60% stake in a Jared jewelry store in Michigan for about $2 million, making a profit of over $1.2 million. This is the big sale we saw reflected in their income statement. This is also very important. It tells us that in July 2025, after the period covered by this report, the company agreed to sell its stake in an Advance Auto Parts store, expecting to get around $498,000. This means their recent activity of selling properties has continued even after June. Now we get into management's perspective. They're talking about future expectations like how they'll use cash, anticipate rental income, and manage growth. They're also very clear about the risks they face, like market conditions, economic downturns, and tenant defaults. This section is about how they make important decisions regarding how they account for things, especially when it comes to valuing their properties. Here they explain how they decide the value of land, buildings, and even things like lease agreements when they buy a property. This involves making estimates and assumptions, and if these estimates are off, it can affect their reported income. This part is about how they determine if their properties have lost value. If the cost of a property on their books is higher than what it's worth now, they have to record that loss. This is important for understanding the true value of their assets. Management here acknowledges that national economic conditions, higher interest rates, and inflation can impact their tenants, potentially affecting their ability to pay rent. They are aware of the broader economic climate. They highlight that rental income increased due to rent increases across their properties, but this was partly offset by selling a property in March. They project around $1.6 million in rental income for the full year 2025. They also mentioned that expenses related to managing the company and its properties have changed, with some related party expenses decreasing and others from unrelated parties increasing due to things like tax and audit services. This section talks about their cash situation. They've seen a good increase in cash in 2025, mainly from property sales and operations. Even after distributing money to investors and buying back units, they expect their current cash and incoming rent to be enough to cover expenses and continue distributions. They state they have no significant off-balance sheet arrangements, which is generally a positive sign, meaning everything important is reflected on their financial statements. They've noted here that they don't need to provide detailed market risk disclosures because they are considered a smaller reporting company. This means they aren't subject to the same rigorous reporting requirements on things like currency or interest rate fluctuations as larger corporations. This section confirms that the company's management has put in place effective disclosure controls and procedures to ensure that all required information is accurately reported on time. Here they detail how investors can sell their units back to the company. They have a program where units can be repurchased, but with limitations. It also specifies that the repurchase price is 80% of the net asset value per unit, which is a bit of a discount. In April 2025, they repurchased over 1,104 units, and the average price they paid was around $509 per unit. This repurchase program shows a commitment to providing liquidity for investors, though the discount means they aren't buying them back at full market value. Finally, the report is signed off by the President and Chief Financial Officer of the managing member AEI Fund Management XXI Inc., confirming the accuracy of the information presented. So what's my take on AEI Income and Growth Fund 25 LLC's performance? Well, the strong increase in cash and the significant gain from property sales in the first half of 2025 paint a picture of a company actively managing its portfolio. The sale of the Jared Jewelry property was a major positive driver for their net income and cash position this period. The continued trend of property sales, as indicated by the subsequent event in July, suggests a strategy of actively repositioning their assets. On the flip side, the repurchase of units while providing liquidity does so at a discount, meaning remaining investors might see their stake increase, but those selling are doing so at a reduced price relative to the company's assessed net asset value. The company appears stable, with rental income providing a consistent base, and management is transparent about macroeconomic risks like inflation and interest rates affecting their tenants. Overall, it's a company focused on steady income and strategic asset management rather than high growth, high risk ventures. That's our breakdown of AEI Income and Growth Fund 25, LLC's latest report. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.